Hello and welcome to this video. In this video I'm going to be making a stock analysis of Nexstar Media Group. If you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice, this is purely for entertainment and educational purposes. Now, if you don't know what Nexstar Media Group is in, they're in broadcasting, as you can see right here, which is radio and TV. Now, as you can see on this map here, this is every station they have, which is both radio and TV, and they are one of the largest in the USA, as you can see right up here. And they recently just offered to buy a competitor called Tecna, which is also the reason I think they're quite interesting, because this is just good, because in a station like this, we want volume, because of course, if a company wants to buy ads, it is better to have more and more stations, and then you can be better at bargaining and get a better deal. Now, if we go back to the stock itself, as you can see, it's a bit up and down. As you can see, we have huge rises and falls on earnings often, and overall, it's just quite volatile. Also, in the RSI, we have quite a lot of up and down. Even though the beta is below 1, which of course is nice to see, but recently we have seen quite a lot of volatility in this stock. Now, recently we have been in the upper RSI, as you can see right here. If you know what the RSI is, that is the relative strength index. So if something is between 70 and 50, it is in the upper channel, meaning stock is trending upwards. If it's between 50 and 30, it is in the lower channel, meaning stock is trending downwards. And as you can see right here, when a stock is falling rapidly, it is oversold, or when it's rising rapidly, it is overbought up here. So when that happens, we want to be a bit extra careful. And today we just hit the overbought just a smidge, but we are still down again in the normal upper level of the RSI. Now, something I like about this stock quite a lot is the dividends. As you can see, all these little blue D's down here, those are the dividends, and they pay out quite a nice dividend yield, as you can see right here, 3.80%. And as you can see here, they have been increasing the dividends quite a lot over the years, which is of course lovely to see. And the thing you have to know about a company like Nexstar Media is, of course, they can't compete with Netflix or Disney Plus on new shows, but the thing they really are great on are like political things and local news and weather and stuff like that, which Disney and Netflix really can't compete. And here you want volume, and you want bigger and better, and here Nexstar Media Group is by far my favorite. Now, there's only one problem with them, and that is their debt situation. As you can see, they have quite a lot of debt, which I'm hoping that they can reduce. And now, even though they're still going out and buying companies like Tecna, and you can see the name Tecna right here, that stock soared 30% today because of the offer to purchase it. So if they can get a bit of a grasp on their debt, which would be nice, because the interest rate in the United States is a bit too high right now, in my opinion, for companies to have this much debt. So we would love to see if they can get some of that a bit more down. Now, if you can see down here in the annual earnings, as you can see, the revenue is quite great and their margins are quite nice and thick, which we love to see. And as you can see down here in the revenue, again, it is broadcasting, and then we have some other corporate and other, but overall, broadcasting is by far the largest part, and they're only in the United States. That's of course because you're focusing on local TV and news and political views and so on and so forth. Now, if we go down here to the seasonals, as you can see right here, for the past 10 years, as you can see, we've had quite nice gains, double-digit gains for many years. Of course, we have had some poor years, but overall, it's just been performing quite nicely. I do personally think this is a great stock to have in the bottom of your portfolio. Now, personally, I don't own it yet, but I have been contemplating buying it, and currently the technicals in the stock as well is quite decent. So I might purchase it also just because the dividends in this is absolutely crazy. So it is very, very nice. Now, if you go into technicals, as I said, it's quite nice. For the day, it's a buy, and for the month, it is still a buy, which shouldn't surprise you. Just look at it, it has been performing quite nicely, and we also have this golden cross right here on the 26th of June, and chances are we're just going to continue to see that, especially if they can get to buy Tecna, because Tecna is also quite decent size, which will just get a better grip on the entire broadcasting market itself. Analysts rating this, we have quite a lot of great ones. As you can see, we have 11 analysts on it, and we have 7 strong buy and 4 hold. That is quite usual for good dividend stocks. We have a lot of hold and a lot of buys, because if you want a fat stock in the bottom of your portfolio, which isn't going to just boom 1,000% a year like Palantir, Nvidia, whatever, I do think a company like Nexstar is great, because we are still going to need them. Now, the EPS evolution, as you can see right here, it is still ups and downs, but overall it is quite positive, and as well down here in the revenue, it is increasing more and more and more, which is of course lovely to see. Now, the estimates in this, I think, are quite realistic. Max up by almost 30% this year, and average up by 11.5% is quite average as well. And of course, the minimum here is down by just minus 4%, which wouldn't surprise me if that either. Overall, I just think it's quite realistic. Most of this is going to end up about how the purchase of Tecna is ending and how much they can incorporate into their business model and as fast as possible. But overall, I think it's nice, and it wouldn't surprise me even with a couple of years it would hit about 300 bucks. If you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice, this is purely for entertainment and educational purposes. But if you want to see more videos like this, please leave the company terms analyzed in the comment section below.